Hello, this is Richard Wilson coming to you from Buckingham Palace in London, and today I wanted to talk to you about the importance of securing royalties when you're building a portfolio of equity stakes for your family or yourself. This is something I've ran across myself, and I've seen only a few family offices doing it, but I think it's pretty critical. And there's this huge trend right now of family offices wanting to do direct investments or acquiring 5%, 7%, 50, 90%, 100% equity stakes in operating businesses of all types. It could be a dry cleaners, it could be a restaurant franchise, it could be a $50 million a year law firm or marketing consulting firm. And lots of times what the problem is here is that a lot of these families have a lot of equity stakes and they're worth $100 million, $300, $500 million, but they don't see much of that cash coming out. And there are separate videos on controlling versus non-controlling interests, having board seats, controlling risks and downfalls within operating businesses. But what I want to talk about here are royalties and why it's important to structure these into at least a segment of your investment portfolio. If you look at a traditional stock portfolio, the equivalent of this is buying some stocks which have a dividend payment each month or each quarter. The equivalent is finding some stocks which produce an income or an ETF that provides you with income every month. And it allows you to take some capital back off the table and reallocate it either to another equity stake or just your operating structure and overhead overall. And the problem comes when you have many equity stakes and those companies are producing some profits, but they're investing all of those profits back into the business. And yes, the CEO of the business, which is probably not yourself or the family, is being paid a salary and they might get a small bonus. They're probably not taking large dividends off the table and extracting capital from the business. They're probably trying to raise capital and raise more capital, which might, sometimes dilute you further in the investment, the opposite of really getting a royalty payment there. And so the trick here, I believe, is that when you have leverage at the table, instead of asking for a certain valuation that's a bit more aggressive, or instead of asking for a 17% return on your asset-based loan to this business, perhaps ask for 11 or 12%, and then also ask for some sort of royalty off the business. So, many times asking for a 1.8 to 2.8 gross revenue royalty is low enough. It's almost like a credit card fee type royalty. It could be for 7 years, 10 years, in perpetuity is the best. And that way you get some upside on top of the equity. And that way, if you never exit the equity, or if it takes 20 years, you might get your capital back out of that investment over 10 years. And this is something that I think is very critical. I've not seen spoken about at any family office conferences, and I've been to dozens of them. And it's something that I think that family offices have the right type of leverage where you can negotiate these types of deals. This is something I ran into last month. I'm negotiating an equity stake in a commodities firm based in North America. I'm also negotiating an equity stake in a large services business based in New Jersey, New York. And in both cases, the issue was, how do I get my money back out of this business? This person might run it for 15 years before, quote unquote, going public or experiencing some type of exit. And the big question was, how do you get your money back out of that investment so you can make another one and, replicate, duplicate, and grow exponentially your portfolio of equity stakes in operating businesses. So this is a topic I'm very interested in because almost every family office that comes to me, including every single one of the $47 billion single family offices I know, are interested in direct investments, co-investing in club deals. It's interesting because I'm growing my own portfolio of equity stakes in businesses that I didn't start. And as many of you know, I run several operating businesses myself. So this is a topic very close at hand for myself, and I'll be sharing more on this in the future. It's Richard Wilson, CEO of the Single Family Office Syndicate, Billionaire Family Office, and head of the Family Offices Group Association. Coming from London, and I'll see you again soon.